Welcome to Winning Wall Street's Money. Help support my channel. We need to get to 1,000 subscribers pretty much as soon as possible. So then I go live streaming because YouTube policy, they won't let me go live until I have 1,000 subscribers. Thank you to all the folks out there that have subscribed to my YouTube channel. If you have not yet, please take this moment now with helping me. Click subscribe. Next, click the bell. And next, click all. This helps you receive a notification when I post my next videos. Plus, click the thumbs up button and every time you watch my videos. If you got value from this video, if this was helpful, then please consider sharing a small monetary donation to my channel by going below and clicking on either my Patreon or PayPal links. If you join my Patreon page, then you'll get early access to these videos 24 hours before they're posted on the YouTube and lots more. If you prefer just leaving a small tip, click on PayPal. Either way, then you get that warm sense of satisfaction years down the line knowing that you helped me become a successful YouTuber.
Wednesday, April 20th, 12:50 p.m. New York time. Gonna show you some stocks and desktop trading platform. This desktop trading platform is Thinkorswim. It's offered by, well, it used to be its own broker company, and then they sold themselves to TD Ameritrade, which sold themselves to Charles Schwab. But again, this is this desktop trading platform, Thinkorswim. And we're going to discuss some low price stocks that were penny stocks, were above penny stocks, and some are penny stocks again. Penny stock is defined by the regulatory body as a stock listed under $5. We'll start off with multiple time frames, 4 grids. Each of these grids, same underlying financial instrument. And from the right, the grid here, weekly. Next grid, daily. Next grid, 30-minute. Next grid, 15-minute. Open up the grid on the right. Stock symbols here on the top left, Bravo, Bravo, India, Golf. Last price, $2.47 and some pennies to the right. Got it? So it's more than 2 numbers to the right. It's 4 numbers to the right of the decimal. I don't like that. Let's go click on Trade tab. Excuse me. Look at the bid and the ask. Bid is $2.4600. Ask is $2.4700. That's wide. Yep. And the volume is 8 million plus. That's good. It says options listed on it. Let's do an example of an option. See if they're listed any better. We'll open this one. There's 37 trading days. So since the last price is $2.46, some change, we'll let the nearest strike price. The nearest strike price would be $2.50. So on the left, bid 38, ask 41. That's good. And on the put, 36 for the bid, and well, now it's changed 3. Oh, that's wider there, not so good. Let's go back to the chart. Looking here at the weekly, each candle's a week. Yep, small trading ranges for the past several months. Let's do the drawings I have. And let's zoom in. So for the current week, the trading range color is red, lower high, lower low. Trend is down. And for the week itself, it's much closer to the bottom. That's not good. Now let's go look here at the daily. The current candle is an inside candle. Simply means the high low of the current candle price range is not above or below the prior candle. Because it's a solid body, it's equivalent to a red candle. Where here, see this yellow candle, and it's a hollow, that's equivalent to a green. So notice this gray area, that's acceleration. And up here's a gray area acceleration. And notice these 2 accelerations, rectangles, yeah, they're lower low. Staircase pattern lower low. The trend is down, the momentum's down. Let's zoom in. We have these little tails on the bottom. So there's a demand there, buyers stepping in there. But again, the bigger picture is the trend is down, staircase pattern a little lower. So briefly, some buyers stepped in there, and that $2.50 numbers, big round number, very important numbers, 250. Well, right now we're trading below it and potentially going to go lower. Let's go look at the intraday. Intraday would be time frames, well, below the daily. So we're looking at 30 minutes. US stock market, your stock exchanges trade from 9:30 a.m. to 4 p.m. New York. Yeah, that's kind of odd. It starts on a half an hour. So that's why I'm including the 30-minute candles. Because if I do hourly, it's not truly representing accuracy for the day. It's going to include, yeah, got it, understand, hopefully you do. Okay. Now for the futures market, it trades from 6 p.m. to 5 p.m. daily with that break from 5 p.m. to 6 p.m. So I use hourlies, but here we're looking at 30 minutes. Look at this red candle, huge tail on the bottom. Yesterday, this white candle, huge tail on the bottom. Well, my settings on this desktop trading platform, Thinkorswim, the white candle simply means that that trading range, it opened and closed the same price. That's what it is. Where a green candle means it closed higher than it's open, red candle means it closed lower than it's open. Got it? And again, I explained to you what the yellow candles mean. If you didn't catch that, rewind the video. Well, these red candle and that white candle have long tails on the bottom, representing demand zones on the bottom. First here, high tail on the bottom, on the top, supply zone. Also bearish pin bar. Now we're doing retracement. And we already see what history did here and here. There we go. So now potentially retracement here, maybe we'll have that same thing form. It may form today, it may form tomorrow, or it may not form, it may just continue going lower low. But if I see a candle like this occur again within these ranges I have here, this gray zone, that'd be considered a potential buy area. Not necessarily on this underlying stock, because I gave you my reasons why the liquidity is not good. Okay. Let's look at the 15-minute if you want. Oh, similar to the 15-minute. Let's go into another stock. Charlie, Papa, Romeo, X-ray. Let's look at the trade tab. Last $8.44. Bid $8.44. Ask $8.45. Volume 246,966. Yeah, the volume is really low, much lower than the other stock I showed you, but the spread is tighter. Interesting. Look at the options. All right, let's open this one. It happens to have options. Again, the nearest strike we want to look at. Here's the strikes. We want to look at the nearest strike, similar to the underlying 845. Well, wide increments. Not surprised. Not surprised when it's a low price stock. So let's just do, for sakes, 750. Okay, look on the call. Look at that. 95 for the ask, 135 for the, 95 for the bid, 135 for the ask. That's terrible. Look how wide that is. Let's go on the put side. 20 for the bid, 35 for the ask. That's also terrible. So one reason not to trade the options. Again, these things could change in the future, but right now it's pathetic. The liquidity is low and the spread between the bid and the ask on the future, on the options are bad. Let's go to the chart because maybe you're trading a stock. Let's look at the higher time frame. Look at the weekly. Look at my settings, drawings. These are manually made, these drawings. It's a lot of labor. It's a lot of labor. If you can't handle work, you might want to pass and outsource it. Yeah. Okay. So $8.50, red horizontal line. Big round number, significant number. Well, there's a supply zone up there because you see a long wicks on top of it. The long wicks are longer on the top than on the bottom. Hey, do you know what the other name of these things are called? Yeah, some people call them shadows. Okay, some people call them wicks, some people call them tills. So you're going to hear me use multiple names multiple times. But again, I told you 3 names: shadows, wicks, tills. They're longer on top here than on the bottom, so representing supply zone sellers up there. So logically, you would say, or logic, if you apply logic, don't be buying up here. Yep, don't be buying up here. Now, if it breaks above, close above, that's a whole different thing. But right now, it's showing as a supply zone seller. And same down here, look at these long tails. Demand zone buyers. So one would consider not to be shorting when it's in here. Maybe if it breaks below here, shorting. What does shorting mean? Well, there's several words people use for shorting. Overall, it means bearish. They're looking for price to decline. So some might be putting on a sell order down here. Sell to open, that's shorting the position. Okay. Now let's go to the daily. The daily. Yep. These prior drawings, vertical lines, if you want to know what those mean, you could draw on Patreon. I made a passive video explaining what's going on here, and it's still occurring here. Yep. Distribution, smart money looks like it's selling here, unloading. So pump and dump, pump and dump. It also has earnings coming up soon. Hover over that. The earnings are next month on the 9th after the market closes. Yep. So maybe some of the shareholders or big shareholders, maybe it's the employees, the board members, who knows, institutions own. But again, looks like smart money selling, unloading it, get rid of it. They don't want to own it. They know something that you may not know, that they bought it dirt cheap. And now they know the value is not equivalent to have momentum continue going higher. All right, let's look at the intraday on the 30-minute. Look at this. And look at that. Potential areas on a retracement to see if buyers step in there. Yeah. Let's see if I do any drawings on this. Nope, wasn't important enough. Okay, let's go to another stock. November Oscar Kilo, Nokia. Last $5.33. Look at that. 3 numbers to the right of decimal. That's not good. Why? Because it's not just going to jump from $5.33 to 34. No, that 5 will change. So you need a lot of movement. Yeah. There's better stocks than that. Look at the volume outstanding, over 19 million outstanding, where it says get bid 533 as 534. But we know there's numbers to the right of that further. Let's look at the options. Let's look at one that's right there. 20 May, expires 30 days. Again, the underlying is 533. Let's look for the nearest strike. 5, look at the call, 43.45, that's good. Bid 43, ask 45, that's good, nice, 2 penny wide. Now look at the put side, 11, 13, 2 penny wide, that's good. That's good. Again, it helps when it has high liquidity, high volume, and tight spread. That helps a lot. Let's go look at the chart. We're going to start off with the weekly first. Make sure I got my drawings right. There we go. So the current week is green. Already made a lower low than that prior week. So this yellow horizontal line, demand zone. So this green candle, small little tail there, had a demand zone buyer stepped up. So I labeled that yellow there, and current candles inside that showing buyers are stepping in again. Outstanding. We're already aware of that now. So from the top down meaning the higher time frame weekly, we'll go down to the lower time frames and see if there's potential triggers to have a reason to maybe want to buy. What's going on here? Earnings this month on the 28th before the market opens. Think about it. Maybe if you do a trade, you may want to close it before earnings, because whatever you think you know could be 100% wrong come earnings. So nothing wrong with doing a swing trade from now and close before earnings. So it says before market. So you'd have to close it on the 27th, any day before the 28th, you close it. Okay. Again, here, supply zone, sellers up here. Now we'll look at the daily. Look at the daily. Gapped up here. I'm going to zoom in. Gapped up big. So from the high here to the low there, you see these Fibonacci's. And it's already doing a retracement from there, that high to the low, doing a retracement, already above 50%. That's good. That's good. If this trend continues to the 0.618, that's even better for bulls. What does that mean? Well, that means if it goes above the 0.618, and then makes a retracement, the probability is less that it will break this low. So if it does that, makes a retracement, you would look for a potential trigger, whatever you consider as a trigger. I use candlesticks, not studies, and then use that as the opportunity to buy bullish. Might be the stock or the option. Now, like I said, if it does that 0.618 and then does a retracement, that also means probability is that it's going to break this high. Yep, so that'd be extension. And then here, from here to there, it already made a retracement 0.50. Well, that's good. That's good because it's showing strength, because if it continued going lower, it'd be weaker. It's still concerning. Because it did a deep retracement, did more than 0.382. That means this retracement here may only go to that high, may not have enough momentum to go to the upside. So if you're in the trade already, one considered having a target price higher, or since it gapped up, you might already be taking your profit. Yeah, let's go look at the intraday on the 30-minute. Oh, I don't have drawings there. It's okay. So here, look at that tight consolidation for the gap up. Let's zoom in and see if you notice a few things on these 30 minutes. On this last candle yesterday, you're going to see volume down here on the bottom left when I hover over the candle. Volume was 3,500,000. That high was higher than here. So that was 1,224,000 there. So that's good. It made a new high on higher volume. That's really good. And then today again, even higher. So it had more volume pushing up to the upside. That's good. So now maybe people are selling it, unloading it. They made their profits. Swing trading, day trading. So why would you want to be buying up here? No, somebody's buying up here, but it's not the smartest thing. Let's just unload. Let's load a study from the daily. There we go. Let's load the study from the weekly. Again, we're looking at the 30-minute chart, but I just want to show you how the studies are. Okay, let's take this off. There we go. So again, concerning. Yeah, day trading is one thing, but swing trading, I would not be buying this up here. No, the momentum already started. Don't catch a falling knife. Yeah, don't. And we're going to do one more. Something popular. Let's just do AMC. AMC. Earnings next month after the market closes. Let's do the weekly. Look at this huge candle. Bearish pin bar, huge tail, potential retracement up there. Let's draw that. Yep. But currently, let's remove this drawings, wrong word. Look at these 2 past weeks, small low tiding ranges, suspicious, very little activity, low volume. Let's go to the daily chart. There we go with the daily, zoom in. Tight trading range. Yeah, low volumes. Compare here. Let's look here now on the trade. It's $18.03. I know it's not a penny stock. It's been penny stock before, because when we look at the chart and go back to the longer history, which is the monthly. Let's go to max. There we go. Not too long ago, which was last year, it was below $5. It was a penny stock. Okay, let's go to the daily. See all this down here? Yeah, more distribution occurring. Smart money selling, not necessarily buying it. And you can see here, let's just take it from these past few days. Little green candles run up. Sell-offs are huge. Panic selling. Yeah, huge. Again, there's more selling than buying going on here. There's more panicking going on here. So it's like dissecting what's going on here. Now, if you're going to day trade it or swing trade it, okay. Well, learn support, resistance. Hope I don't have any intraday drawings. And let's do this one too. Up 18. Look at that. 3 numbers to the right decimal. Not good. Volume outstanding 14 million. And let's look at the option chain. Let's look at the there's $18. Okay, there's 18 strike, 228, 234. That's not bad. Tight spread. Here, 227.32, not bad. But there's better. There certainly are better ones that are tighter. Let's go with that. So we're going to finish this on a fast moving chart. So I'll finish it right here when I'm going over a few things. Now you have more insight on the desktop trading platform and reading charts, understanding liquidity from volume, tight spreads, as well as some charting methodologies. Is there any particular underline you want me to include maybe in the future video? Or comment below. Many thanks for watching.